Hi, welcome to Pop Economics. My name is Ricardo Cincoli. Today, June the 16th, 2015, we are going to talk to you about what we foresee as the US dollar devaluation happening sometime later this year. And we took a look at Janet Yellen's speech earlier this month, and she gave three very important hints which I am happy to share with you for your own conclusions. So she started by stressing the Federal Reserve's mandate, which is to keep both unemployment and inflation under control in the United States. The inflation target of 2%, which is a common percentage across other central banks, is not a concern for Janet Yellen. She mentioned that she would not foresee a problem in the inflation rates for the next few years. She also said that unemployment is not a concern. However, she said that she is concerned about part-time employment and the lower wages that are being paid for US workforce. She also expressed concern with an index that not too many people talk about, which is the Industrial Capacity Index, which is in its records low, roughly 70% only of US industrial capacity. She didn't say a word regarding what they call labor occupation rate, which has been quite low. We've got to understand that the unemployment rate is calculated based on applications for EI, and to have a better picture of how employment is doing, we've got to look into that, but also we've got to look into another index, which is the Job Occupation Index, which has been quite low in the last few years. So based on those two scenarios that Janet Yellen discussed, on the inflation side, there is no indication that she would raise interest rates, and on the unemployment rate side also there is no indication that Janet Yellen would raise interest rates in the United States. We should also take a look at what she did not say, which is fiscal debt. The United States fiscal debt is gigantic, and the public debt is heavily affected by a rise on interest rates. Each quarter, the market, the stock markets and the foreign exchange markets are obviously very alert to see in which direction the Federal Reserve will follow in relation to interest rates, because when the Federal Reserve rises interest rates, the US dollar tends to rise. If the Federal Reserve keeps interest rates low, the US dollar tends to decline. So based on those two aspects that Janet Yellen commented upon earlier this month, we do not foresee a change in the short term in the policy for interest rates by the Federal Reserve Bank. When the markets see that, probably there will be a continuing run onto stock markets. However, that can only last so far, in my opinion. We might see in the third and fourth quarters of 2015 a decline in the US dollar, and companies going to look for investments elsewhere, and it's gonna be another cause for decline, a deeper decline in the American currency. What to do about it? I am not a financial advisor, but I would bet on silver. Silver is a metal that has been used in different commodities such as electronics and also power generation. Gold is also an important metal as well. I wouldn't discard investments in cryptocurrencies such as Bitcoin, Litecoin, Ripple. Comments, questions, critiques are welcome. Bye.